Hi,
Yeah,
Dale.
correct. Henrik, so nice to meet you, buddy. Thank you for taking time to be with us after not the wildest NFP report that I've seen. The dollar caught a little bit of a bid because of what
Yeah.
happened here with the hourly wages, but the dollar really took it on the chin this week. And I read a little bit about your background, and you started becoming active in the markets in 2005. So I want you to get into a time machine right now, Henry, and go back 11 years because everyone has to start sometime, somewhere, someplace, and tell us what it was like for you in the beginning stages of your trading career. Did you have any mentors that helped you along the way? Were you self-taught? What were your influences? And who do you blame for you being in the industry to this day?
11 years is a long way to go back, but what brought me back, brought me into investing, into trading also. I think it was probably out from a standpoint where I thought that going to work on a daily basis and doing what I did was fun, but it was also fun to start seeing the patterns in the market. Actually, I have a background from economics from the University of Copenhagen, and seeing the things that started to move, and also the explosion in debt levels and in prices, equities and things at that point was something that was appealing to me, and I was starting to think, okay, so what is really behind, what is driving this? And then looking into and utilizing my background, I was starting to get into the charts, and that's where it really came from.
Right, I'm curious. You have an educational background in economics. At Copenhagen University, did they also teach technical trading to economics students, or was it mainly how you started following things like the economic business cycle, leading and lagging and coincident indicators? And fundamentals are great for giving you an idea about where a market could go, but the art of this is the when, not the
Yeah,
if, more of the
exactly.
when, the timing of it.
Exactly.
So tell
Exactly.
us how you got involved in technical analysis. I read you've gravitated towards Elliott Wave for
Mm,
technicals.
mm.
Um, did you try any other methods before you became an E-waver?
Oh, I'm not just an e-waiver, but definitely yes. And I think I'm
Okay.
utilizing all the technicals out there. But what brought me there was really that when you look into the mainstream, or into the society of bank economists and experts, and how badly they actually forecasted, for instance, the Great Recession, then I had to tell myself, well, somebody needs to be better than this, and just looking into the fundamentals and kind of making straight line forecasts on how the earnings are going to be and things like that. I thought, well, there must be somebody doing this out there a bit better than that. And that was why I got into to technicals, because what technicals really does to me is it tells me that this is, like waves. We are like a lot of people, individual people, moving, becoming super optimistic, super pessimistic, and and all that kind of create the environment that we see with which would actually turn out to become patterns. And that's why we see Fibonacci works for us. That's why we see Elliott waves also work for us, and that's why I got to that point. Also, I've been studying heavily with other all sorts of uh, people, experts, and what I got to was really that the Elliott wave theory was one thing that appealed to me, because it kind of said, well, obviously you can go a lot longer this trend, but eventually we'll have a correction. And it was actually very good when you combine it with the Fibonacci ratios and the things that I look into. Really good at getting to these, being correct on the levels that we're going to reach. And that's also why looking into gold and looking into the dollar and things that I look for the long term, and then I set the trades based on shorter term technicals. So that's what I'm how I'm going
Okay.
about it today.
Well, they say a picture speaks 1,000 words, my trading warrior brother. So If you could show us your screen by going up to the left-hand corner, there's a green box with an arrow on it, and you click it, and then it'll show a desktop. And I read that the three markets that you focus on, everyone has a great interest in Euro, Gold, and SPX. So perhaps you could show us those charts. And
yeah. Let me just see. I just need to see what I have a lot of things open right here. So let me just see. If
all right. We don't want to see your account balance. We don't want to see your account balances or that you have 1,000 lots.
No. That's fine. It's fair and square with me. Okay, but yeah. Well, let me take a look at the. Actually, what I have to say that the drop in the dollar yesterday took me kind of with some kind of surprise. I didn't expect it to be that extreme. I did expect a little bounce upwards, obviously, in the euro US, but not to this extent. So let me just see what I've got here, because I'm actually sitting and updating things right now.
If you were just expecting a bounce and not the magnitude of this bounce, I'm just guessing that you have a bullish dollar view and a bearish euro view. And does the magnitude of this rally change the picture for you at all in the euro and the weakness of the dollar?
No, it does. In the short term, yes, it has to, because obviously this was breaching some of the key levels here, and now I'm expecting the euro to move actually somewhat higher before we're going to see a turn in that, and it probably has to do with the fact that the world is now seeing that the US is slowing. That's becoming quite obvious, and everybody's kind of expecting that probably Europe is safe or Greece is safe and all that, and I don't believe in that one bit. And looking into the technicals, it seems like the correction that we've seen since
still not seeing your chart. Still not seeing.
No. I'm sure that's because I speaking English and sitting here and doing the chart still, and I'm working on it, as I said. But let me just see. It's actually right in the progress of being updated right now, Dave. That's why I'm probably not. Let me just see what I can show.
All right. So you being a fundamentalist guy, still looking at the monetary divergence that we have occurring between the U.S., even if that's not an aggressive year of tightening, still in a year of tightening, and the ECB still in a QE mode. So here we are.
Yeah, and I expect it to be a lot more. This is US dollar, Danish kroner, which is closely related to the euro, because we have a peg, and I don't expect that peg to be broken. But I'm watching into that also, because sometimes I've been seeing the patterns a little bit before here in the US dollar, Danish kroner. And what we saw actually, I don't know if you can see me moving the cursor here, but actually I thought
I do.
That but I thought that where we had the A here down here was actually where we had the C, which will be a C, the last part of the correction, and then we had a move up here, which was 1, and then we had a 2 here, and the 3, and then we had a 4 going down to somewhat this area around here, and not breaking this. So breaking this line here, we have this support here. Was where when I saw, okay, this is not moving the way I was thinking, and then we saw that actually
that happened with the bout of dollar weakness this week.
Exactly,
that was that triangle.
Exactly, yes, and it broke down, and you could say that, well, what's then? What's going to happen? Well, looking at the bigger picture, I don't have a picture of that right here in this, but we can still see that a big bottom has been unleashed from the move last year in I think it was May, the bottom of the dollar was May last year, and I still expect that picture to play out. So what we still see here is still a correction. Let me just see what I'm getting to here next. So let's see. These are them. I probably should have. But what we still see here is that it's still in a correction, and this correction will probably move down to some levels that I've had here on the charts before. So I'm expecting down to 661. I don't know what that is in euro US dollars right now, but that's the next part I'll be working on to get it over there. Or even and even further down, and maybe even lower down than the high in the euro US dollar, which is the low here in this one. A here, it will probably move further down than that. So in this area, 6.32.37 in the US dollar DKK will be an area where I'll jump back in. But what the move did to me yesterday was to tell me that now we're going to see the long anticipated wave of move up in the gold. So I actually went long gold. I haven't done a lot of it. Again, I probably should have prepared some more charts for you. But I'm expecting now to gold to go a lot higher and actually going up to at least 1430 something, or maybe even higher than that. So there's a good chance of earning good profits there, getting some gold right now, and that has to do also with the increased dollar weakness, which we're going to see going down to this C area here, or this area at least.
Okay, so those August lows in the Dixie were about 92, and the euro was 117 there. So maybe now you're probably talking about a 120 euro, if that plays out, right?
Yeah, that could be. Again, I need to update that chart, but that I definitely see the August again. The Dixie is also there are other currencies in that one, so it's not 100% correlated with or not one-to-one movement in that, and then the euro US dollar, but still, yes, a lot higher on the euro US dollar and lower in the Dixie, yes.
Okay, interesting. All right, so we're and this still could be viewed as a corrective move in the dollar, and then once it plays out, maybe that's when we get our move to under parity in the euro and 102, 105 in the dollar index.
Yeah, definitely. I think that not 102 and 101 parity won't do it. I think we will move further than that, and we'll see a much stronger dollar, and it could go as far down to testing all-time highs for the dollar compared to the euro. That's what I'm seeing. I don't have that.
So what you're talking 75-cent euro, 85-cent euro?
82. Yeah, that's what I've been looking at. Yeah.
Okay, interesting.
But over
what's your view? I know that you also go ahead. I'm sorry about it.
Yeah, sorry. Just going to say that it's not going to play out, immediately. But first, we have to see this corrective move, and then I think it'll be from there. It'll be down for the euro as the world realizes that the eurozone is not doing well. We're not doing well here. Southern Europe is not solved yet.
Okay, so we have a pretty good bullish view in gold and continuing weakness in the dollar. How does the S&P fit into that jigsaw puzzle?
Well, as I see it right now, we are definitely in a bear market, and that's where I've done some work, and I'm expecting now to see a classic godly ABCD pattern play out. Because why do I do that? I see that we have had 5 phases down here in the first leg down in wave 3, and now it's going to play up, and we're probably going to see a bounce which will could be reaching the 50-day or the 200-day moving average.
That's also, I believe, 61.8 back, isn't it? 1978, 1980 of the decline from the end of last year.
Sorry, once more. I didn't understand that date.
1978, 1980 is a 61.8 retrace of the decline.
Yes, exactly. That's what I'm looking to. That's around there. That's the area where I would go short. Okay, I will not expect any today. Also, following the employment numbers today, we saw some kind of movement, but this is not it yet. We will still see some push upwards, a rally, might be slow, might be faster, and then come next week after, something like that, I think we'll reach the peak of that, and then it'll be down. And actually, I expect that then we'll have the kind of fast large decline, daily declines in the coming from following that rally up, because that's when we will see the kiss goodbye to the.
What's your downside objective for wave 5? 1750?
Yeah, probably a little. That depends on how it's going to play out this, but probably, yeah, I can't say on this one actually, but it probably is, let me just see, yeah, something
1650.
like that. Yeah,
Okay,
that
great.
was actually done before this one. This one doesn't actually hold valid. It's not valid anymore. This what I've done here, but it
So
could
do you think
be.
while that's going on, crude makes new lows? I
Crude will
know if
make
you're
new lows.
trading S&Ps, you're watching crude oil.
Yes, I am, and I think
Okay.
it'll go down to we didn't break out through the downward trend channel that we have, and what we see is that probably that if what I'm looking for here is that we have a wave 3, then we have a wave 4, and now we are in the wave 5 here, the final wave down, and if that wave is going to be 61.8% of wave 3, we're probably going to see that we'll go as low as 22, 23, maybe even dipping 21 something.
Okay. So even the weaker dollar isn't going to support crude. In fact, maybe weak crude is bearish a dollar because it's a petrocurrency.
Yeah, could be. Yeah, there's some kind of linkage there, or some kind of correlation there that could be. Yeah, I don't know how that works out, actually, to be honest.
Okay, so tell me and tell us, Henrik, what's your business model? Do you mentor people? Do you have a signal service? What do you do? Do you just trade your own account? Tell us what you do.
I trade my own account. I don't. I tell people if they ask me what I think and how I see things, and actually for quite some time I've been very bearish on the on crude. I was actually, last year I was seeing this deflationary environment play out. It wasn't obvious a year back that it was going to come from China, but now it's quite obvious. And what we're seeing is that this deflationary collapse, we could say, is going to play into equities. It's going to play into mortgage loans and things like that. So when people ask me how I see mortgage loans, and banks experts are telling us, well, bank experts telling us that the mortgage loans or the interest is going to go up. I say, well, I don't see that. I see it's going to go down. And when you look into also lacking leading indicators, as we talked about, I use those to set the big picture. And what I see is that leading indicators are now breaking through where we would expect that further weakness is going to be shown in BNP, in employment, and so these numbers that we see in the U.S. now is not coming as a surprise, and all of when the coincident indicators are playing out, we'll then also see that the interest rate is going to fall yet again as we enter a new recession.
Okay, do you think Europe has gone to negative rates? BOJ did it. Do you think eventually the U.S. is going to go to a negative interest rate policy, and that means that possibly the Fed does not tighten anymore but reverses course? Do you think that's a possibility? They pull
it's not just a possibility. They will have to. They will simply have to, because what I see is that when we have had the correction in the dollar will then again start to increase and start to strengthen, and that strength is going to kill all efforts to grow in the world. I mean, emerging markets is getting killed by the strong dollar. So the only way that actually we can get growth back into the world at a certain point is by eventually not killing the dollar, but making it a lot weaker. So what we're going to see is a massive stimulus, massive kind of effort from the Fed, maybe a huge. We'll see that as the deflationary scenario is playing out. And then,
so maybe we have to trade 1650 in the S&Ps for there to be enough fear from the Fed to start.
I see it's go a lot lower.
You have an economic background, and I'm not sure if you were around in '85, but we had the Plaza Accord, and that was pretty effective at bringing down the value of the dollar. Do you think there might be a Plaza Accord 2.0 in the works?
Yes. I think we're going to see a lot lower levels when it comes to equity prices.
Show that last S&P chart. Show that last S&P chart.
Yeah, an S&P chart. It looked like. Yeah, I'm going to show you a long-term perspective from my end here, and actually, I'm seeing a revisit of the 2009 lows before this is played out.
Wow.
And that's what we're going to see over the next couple of years. Let me just see if I can find it, because I have different pictures which shows me different things, angles here, and I just want to see, because
I saw it going to 1250. You had a chart showing S&P's going to 1250 up there.
Yeah, but that was
there.
That was
So do you believe that? And that's the third quarter of 2016 into the end of the year.
I definitely believe that's going to take,
by the end of the year.
Yes, let me just see. This is the one. That's actually the one. We have it here, right here. That is the one.
And then 750, and then and then going back to the 08 lows by 2018-19.
Yes. What we see
All right.
here.
Well, I'm going to be working on my bomb shelter this weekend.
Yeah,
so you have a third drive down at 500.
Yeah, what we're seeing here actually on the major cycle here is that this we had wave 3, which was peaking in 2000, and what we've been seeing over the last 20 years, which is a secular bear market, is actually just a corrective pattern. So the corrective pattern is going to peak out here around where we are now, where this probably we've seen the peak already, and then if following the Elliott waves, we're going to see a C wave, which will be probably playing out somewhat like this. So quite a powerful move down, and the first, the wave 5 that we talked about here was probably around 16 something, but that will be the first wave, and then we'll see a corrective move, but even it will go even further than that when we have the full waves playing out. So yes, definitely a low of, and how do I see that? Well, what we see here is that we have wave 3 and we have wave A here. And then, just taking, we know that, wave C is often, it's 161% of wave A. And the 160% from wave A, from the top of wave B here, will simply bring us down to that level. And, it's just a coincidence, actually, that it's actually just down to the lows of 2009.
Yeah, that's Harry Dent's target, 6,000 in the Dow.
Yeah, that's probably coincidence.
Let me ask you this. There are still some Elliotticians, and, there's so many alternate counts in Elliott, right? That there's a possibility that if these recent lows hold,
yes,
that or even a retest, that this is an ABC for 4, and there could be one more push up to 2,200.
Yes, I've seen that as well.
What do you think of that?
I think it was, again, Elliott wave needs to, the wave needs to prove themselves. So if we see a strong rally and we see the breaking above some of the recent highs,
like
yes,
2000?
2017, I think, is probably where I'll start thinking, okay, this could be something more. The bear has not yet to enter the room, but I think 2017, I think it was that the kind of the threshold. But 1976, 78-ish, 1970 something is where I expect that this wave is going to turn, and then we'll see a strong push down as the next wave is playing out.
What a great presentation today, Henrik. I'm so glad I reached out to you. So glad I reached out to you on Twitter, and thank you so much for sharing some views. We really enjoy it when people bring out their telescope and give us some ideas, so we have some long-term biases and we could use our own work short-term to finesse trades. But great presentation. Anything else you'd want to wrap it with, or have we covered? Looks like we covered almost everything.
Yeah, I just want to say that I'm very bullish on mankind. I think that we have great technologies working for us, and we'll be we are so adventurous. We are able to do so much in the world. But these coming years here will simply be set by greater waves and the hybris of central banks and money printing. And I think that's what we're going to see. The deflationary force is something that's going to set in, and we'll have to live by it. But when that ends, when this cycle ends, we'll see a new contrarian spring setting in, and I'm very bullish then on equities when we will reach new levels. But let's see how it plays out.
And you think that 2020, 2022, that we'll have a different system than the fractional banking system and have a different world reserve currency, possibly backed by a precious metal? Or could it possibly,
Maybe.
or could we possibly go cashless like they already have in Sweden, and we have a cryptocurrency so that although it's convenient, that governments know everything we do based upon having a cryptocurrency?
Well, yeah, I think that probably will get to that point. And here in Denmark, we are close to getting that also. But looking at what's going to fix this whole deflationary, recession that we're going to get into is definitely something where we build credibility back into the system. We need to put that back in. Whether they have to do that with, backing it with gold or something, a big shift needs to take place. And it could also simply be that, a new, portfolio of the special drawing rights, SDRs, going to put that up in a different way. I don't know. There are clever people out there seeing those things and understanding what needs to take place. But the minute that's what I see will be the trigger for the next secular bull market, and that's it. What they're going to do, I don't know. I don't know, but I read the charts and then I try to act accordingly.
The geo situation is heating up quite dramatically in the last year or so. Normally, when we go through a cycle like this, there's a war. Do you think that that's a possibility during this time frame? And if you're bullish on mankind, and that there's going to be another upwave, that implies to me that even if there is a hot war, it may not be nuclear.
But I mean, I think we do see war around the world already. I'm watching the news today. We watched the Middle East on fire, and we
it's like Revelation.
Exactly, and it's just a matter of where the war is going to be. And obviously, with the great United States, nobody is going to war with the United States, not head to head. So I think that what we're going to see is small wars around the world, and that's what we're seeing already. So a great war, like a world war, I definitely hope not. I'm a father also. I definitely hope we'll not live through those times. But I'm terrified to see what's going on in the Middle East and other places around the world, and those people are living through hell. And looking at the unemployment levels in Greece and other places also, we have a lot of the situation out there is not good, and so
it's like the 1930s.
It is actually not. And if you look at the Contratiev and all the long waves, we are in the 1930s right now, or in the late 1930s. And what we know is that we have to go through a bad time, and going to be a war.
Okay.
I hope not.
All right. Well, if we're in the late 1930s, and the parallel would be, we had the beginning of the Depression in the U.S. We were coming out of it, and then in 1937, the Fed tightened, just like they did last year.
Exactly.
And took us back into another wave down that we didn't come out of until we had to reindustrialize for World War II.
Yeah, I definitely think it was a mistake for the Fed to tighten. It was something that they had promised, and in order, to keep credibility, they had to do it. That was why.
Let me ask you this. Sometimes I think ignorance is bliss. I wish I didn't see waves like this and think that they were even possible. I'd rather have my head in the sand. Ignorance is bliss. But you have a family. How are you preparing for what you see Kondratiev-wise, cycle-wise, and everything that you've shown us? And in your country, do you fear the possibility of civil unrest, food shortages, et cetera, et cetera? And what are you doing about it?
I'm not. I don't see that. I don't see that in in Denmark, in the Nordic countries, and in Germany and places like that. I think we're pretty much.
How about the U.S.? How about the U.S.?
Well, I think that the U.S. has been living through a long period where the dollar has been very strong, and you have been able to live on top of that strong dollar, and then being able to spend a lot, and which has actually been protecting the rest of the world, including Denmark, and which we've been very thankful for. But also that US needs to reinvent itself also, and it needs to not just rely on a strong dollar and being able to print actually the world currency. So for for the future, something else needs to happen. But whether they're going to come to I think actually it's going to play out in other parts of the world. I see it played out in the emerging markets. That I don't think it's going to come to the industrialized world as much this time. So you're going to have a terrible market, but whether it's going to be like the 1930s with food lines and things like that, I doubt that in the US. I doubt that. I don't think so.
Okay. Thank you so much for discussing. You and I could take our Nostradamus glasses off and do the right thing today, and tomorrow will take care of itself. Yeah, tomorrow will take care of itself, Henrik. I'm so glad I reached out to you. It was a fascinating interview. I want to thank you again for edifying our community, and I now hope I could call you my trading warrior brother.
Oh yeah, definitely.
Can
Please
I do that?
Let's stay in touch on.
All right, my trading warrior brother. Good hunting, and keep in touch, and let's do this again in the next few months down the road. See how these waves are playing out. Okay, buddy.
Let's do that. Thank you very much.
All right. Have a great weekend. Everybody,
Cheers.
Thank Henrik. You can follow Henrik at Henrik, at HENRIK. Okay, buddy, you could close out the hangout anytime.
Bye. Bye.
Nice to have met you.